Victoria, there's a huge amount of dry powder waiting on the sidelines. When will we see that active capital in the market again?
That's an excellent question. And to an extent, we are already seeing it. Private equity tend to be a leading indicator. They come into the market usually first and then other investors follow. And actually, if we look again at the beds and sheds sectors, so we're already seeing private equity, US private equity going into logistics over this year, even as far afield as India, the Nordics, Canada. Also on the residential side, we've been seeing US private equity still at relatively low levels, but increasing even in places such as, again, well, within the US, but also Spain and the UK. So we are seeing these green shoots there. In terms of overall investors, though, some investors, they're waiting for the bottom of the market. Now, that's notoriously hard to call. Some investors are looking for pricing to shift out further, to really see that they're taking advantage of an opportunity of dislocation. Other investors, they're waiting for interest rates to start coming down a little bit, swap rates to moderate, so that then actually debt becomes accretive to those returns, or debt relative to the pricing. So it's really a mixed bag, but certainly if we look at those sovereign wealth funds and those private investors, we are seeing activity taking place there already.
It's interesting your point on interest rates. In most markets around the world, we're expecting those to be topping out, hopefully in the next 6 months or so, and leveling off. What does that mean timing-wise for interest rates starting to reduce towards the mid to end of next year, in your view? And obviously the Fed rate being the most important one.
Yeah, absolutely. There's quite a lot of divergence around the world with the different drivers, economic drivers that we're seeing that different central banks have to deal with. The US does tend to be a leader in setting the rates, and other central banks historically have followed with more or less of a lag. In terms of the US, there does continue to be quite a lot of variability over time of when we're reaching that peak. Just over the last week or so, we have seen more interest and noise that actually the US could be reaching that peak of interest rates now. I think there's over an 80% probability at the moment that there won't be an additional rate increase in September. And part of this is, so we're seeing on the banking side in the US, we're seeing a little bit of softness there, and there's a inflation, or certain type of inflation is starting to come down, and also other concerns around potential weaknesses in the economy. So that could be a positive sign if we're starting to see that stabilisation in the US interest rate. And if we're looking ahead of thinking when we'll start to see those reversals, well, this is where we start to see quite a lot of divergence across economic forecasts again. If we take, for example, Oxford Economics, though, they're suggesting that there could be a steady decrease in rates really over the next couple of years, coming back down to around 2% by the first quarter of 2026. Although, as I say, there is some variability around that. If we look to other places around the world, if we look to, for example, Australia, there at the moment, the forecasts are that interest rates, when they start reversing, they could maybe reverse a little bit faster. If you look over to, for example, Sweden, the UK, actually that interest rate reversal could be a bit slower, seeing stickier inflation, so it's taking a bit longer to come down. And so what that means is you end up with potentially a bit more of a divergence in interest rates, swap rates, and that also potentially impacts on currency as well. And that's something which could also spur international investors. So for an example, at the moment, if you look at dollar-denominated investors or dollar-pegged investors, even if you're looking at currency hedging benefits, actually it's still accretive if you're an investor investing into the euro-denominated assets at the moment because of the currency differences. And obviously, if you're a stronger currency, even if you're not getting those currency hedging benefits, actually you're getting a benefit because assets elsewhere in the world look relatively cheaper.
Yeah, I think the currency impact is forcing a lot of Japanese capital into direct real estate in various markets in the world, which we haven't really seen for the last probably 20 years or so. And I'd say they're the biggest mover in the UK, in Australia at the moment. What can we expect to see in terms of the type of investors that will be looking at that carry trade coming out of Asia into UK and Europe over the next 12 months?
Yeah, absolutely. So it's a mixed picture. I think a lot of family funds, and we're already seeing that sort of interest happening, sovereign wealth funds again, but even some of the larger REITs and investment managers, actually some of the capital flowing into those is still private money, and that's also spurring investment and a desire to actually diversify geographically and also try and find those opportunities. Again, quite a focus along those beds and sheds. Also, when I've been going around the world and speaking to clients, particular focuses. So, for example, life sciences. I've spoken to international investors looking at targeting particular hubs around the world, including, for example, the Golden Triangle in the UK, Oxford, Cambridge, London for life sciences. Also, data centres. That is also a large growing area, especially with the leaps forward we're seeing in AI, etc., as well. So we are seeing a lot of interest. It's more of a timing of when we're going to see that flowing through, and we are already starting to see that.
Well, that's great to hear. We're starting to see some green shoots. I think as soon as investors get some confidence that interest rates are topping out early next year, the market should pick up again. Victoria, thank you for your time. It's been fascinating. I look forward to speaking to you soon.